All right, guys, welcome back to Foxhound Finance, where we analyze market trends, financial reports, market news, and hunt down potential investing opportunities in the stock market using technical analysis. Make sure to like, subscribe, and turn on notifications so you guys never miss an update from me. And lastly, please remember this video is for educational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice, just my opinion on the market. Okay, guys, so today, I'm going to do a total update video again. I'm going to cover Rivian. We're going to start off with AMC, but we're covering Rivian, AMC. We're going to look at the broader market, particularly the SPY, to see what happened today. And also, I'm going to give you guys some deeper insight into the market mechanics. I'm going to do a little educational piece in here. It's going to help you, I think, tremendously in keeping and maintaining your zen when certain things are happening in terms of like drastic price movement in the market so that you can be in control of your emotions and know what the hell's going on. Okay, let's get right into it. Got my notes here. We're going to start off with AMC. Excuse me. So EMAs, okay, here we go. EMAs, again, they're clustered up. We've been talking about this. The 200 is now down to 5, we'll call it 530. It's 529.6. We're rounding it up. $5.30 essentially for the 200 EMA, and it's basically almost about to come down to this fib level of 23.6. Okay, so it's creeping down. Again, looking at the EMAs on the daily here, it's holding pretty well, this price action too, by the way. All the trend lines that I drew from the topping points, like you can see, it's resting right on top of this trend line here. Looks good. Nothing really amazing, to go over here. We're still in the same position, essentially, that we were. We're looking for the McDonald's M, right? Oh, shit. Here we go. Sorry. M, right there, McDonald's. And then first arch, we're looking for the second arch to form, and then you're going to go. Okay, we talked about this in several of my videos on AMC. It's looking good. This dip right here, like I said, I mentioned earnings was going to be this way, right? I think some people are like talking about, oh, we're going to rip and start going up. I saw the pattern right here, how it moved before. And look at this, dude, this is insane. Earnings right here, 5.7, you had earnings right here. This is mad. It's in the same time frame of the earnings, this second part of the M. And we just had earnings. And guess what? We're creating the second part of the M here. Something to note. I don't want to spend too much time on this, but it looks good. We're playing this out. So we understand when we get price action, unless it's something extremely volatile, and I'm talking like 100% moves like we saw over here play out. It was like 2 days. It was like a total of like 400% gain in like 2 days or 3 days. Unless you see something like that, fine. Maybe we're skipping the second part of the M and going. But if you get the little creepy price action like this, you got to maintain your emotions, because it's not like we're just going to creep up to it and then just go. We're going to creep up, come down, and then you're going to just rip off of it. It's going to be very impulsive. Okay, so that's your fractals for AMC. Real quick, we are going to look at the Bollinger bands right here. Bollinger band right here, you're breaking just below the bands. Let's zoom in. Looks perfect. Boom. Right there at the midpoint, you got a candle fully under the band. Literally fully under the band. And I told you guys we are looking for that over here. Like this, right? You have a candle or two right here under the midpoint of the Bollinger Band. Candle-wise, I think there's more candles, obviously, in this structure over here because it's just more drawn out. And I'm going to get to how they do this. I'm going to give you guys insight in how this works, okay? And how they use the psychology against you with my breakdown with some of the educational stuff here that'll give you that edge. So, yes, Bollinger Bands look good, beautiful. What else do we got? Fractal repeat on point so far. We can move over to Rivian now. I think we're good here. That's it. I mean, like I said, there's not much to be seen here. Unless you get the surprise early move, great. Other than that, let's check out Rivian real quick. And the lines here, these are just the fib levels. These are the retracement levels I had. So again, in the last video for AMC, we talked about that. So just go back to my previous video. I explained the fib levels. I just left them up because I don't know, it just looks nice. It gives you something to look forward to. Anyways, same thing here applies. Throw the EMAs up. Everything's all clustered the hell up here. Looks good. I like this. Yes, our third high or low. So we're trying to figure out, is this the third high or low right here where the price action bounced off, right? Price action came down here, touched this 1190, 1180 range, bounced off it, started to try to make another move up, but then came back down, and now we're testing this area. So we're trying to figure out, is the 1180, 1190, whatever the hell you want to call this, is that our third high or low? Or is the third high or low going to come down further a little bit? And we're going to establish something, maybe in the $10 range or low 11 range. That's all we're waiting to see here. But it looks like Rivian's like floating in this area. So it's battling right now to keep this as the support. If it maintains this as the support, you're probably going to get that next move up that we talked about. And I'm going to go a little bit more in depth, like I said, on these whole macro, all these moves. We're gonna break them down so that makes sense. But that's what we're looking for, like right now on the levels with the third high or low. EMA is clustered the hell up. We already see that. They look good, even though they're right underneath. You can see the candles trying to get under. It wicked back down, just under all of our little bands here. Let's look at the Bollinger bands real quick. Putting these on, you're on the bottom band. There you go. So you can see you touched the band here, and then you had a candle try to come up. It's definitely bigger than this candle here, just edging it out. So that looks good. So the bottom band here is acting also as support. So it's funny because you have the third high or low here, but then on the bottom band here, it's just below the third potential high or low, I should say. It's just resting underneath this. So it's sort of using the Bollinger band, the lower band, as like a little trampoline to bounce back up into this zone. So that's what I'm seeing right there. That looks good. Nothing to really see here until we see this drastic move that's going to take place. It's going to go in one direction or the other. And my theory is that because that you're down here and you're showing strength so far, we should be getting some kind of reversal here. Okay. All right. Let's not spend too much time, guys, on that because everything looks great. Fractal repeat wise, roughly ballparkish, looks pretty dang good. Let's see here. I might have messed it up because, yeah, remember yesterday I dragged my box over so you could see the fib levels better. Okay, there's our candle from today. So, wow. I mean, look at this move right here. Boom, boom. You come down and you have these two bigger candles here. And then there's like a huge gap up right here that comes down and then boom, you just go and finish it off. So we're looking for basically this right here, potentially. Okay, it looks pretty good right here to start reversing up. It doesn't have to go like in two candles. It can definitely play out like, multiple candles as long as you're getting the move though. On the weekly, God, I hate when Weeble does this thing. On the weekly, I want to see if it looks any different real quick. No, pretty good. Boom, 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 boom. You got your two red candles here, two red candles here, and then we had this move up. So we're trying to figure out where are we at in the entire macro of this chart. Okay. Like where exactly is Rivian in this whole process right now? When you come down, right? And I'm going to talk about accumulation here. We're going to get into it and I'm going to reference it. I'm sorry. This has to go. We got to get rid of that. Okay. We're going to talk about this. What's going on here? I'm going to make it make sense for you so that you can be chill and you can understand exactly the process that's unfolding in front of you. But that's it for Rivian, guys. I think that looks beautiful. And I'm talking about it every day, so I don't want to like go overkill here. Yep, everything looks good. SPY. Boom. Let's go over here real quick. Cover the broader market. Got my little goofy trend line over here from yesterday. So, dun dun dun. Market crash imminent? No, I'm not seeing that. Now I talked about this. This looks like a big scary thing for a lot of people. They're looking at this freaking out. But in essence, oh shit, that's the weekly. Here's the daily. Whew. All right, we're here. So in essence, what this looks like to me, you broke, I said this right here. When we came down initially and we tested the 50, kind of tried to come back up and was resting in between the 50. The candle was sliced in half like that, dipped under it, tried to come back up, rejected, closed around here. Then you got the full rejection of the 50 and you were sitting right here on the 100 EMA. That is at $589. And we are actually underneath that. We are at $585. So we're just sitting under the 100. We're going to see how does this react. Do we get the V reversal or will we come down to the 200? Which again, this is not a market crash. I talked about this. Like people, when they talk about market crash, like they're basically saying the entire bullish cycle's over. Like that would be a crash, right? That you would get something like this, right? Where it would come down to the 200 and then boom, it would come down here. And then it's just free range right here. Let's see. I think like, let's just say if this cracked, maybe you would come down to this testing point here, which would be $500 maybe. I guess 500 could be a target. Maybe if you were like in somewhat of a crash. Yeah, I think that would make sense. Like maybe if you came down here, maybe even here, if you want to call 535 a crash, but really I see this as a pullback right now. But really you'd have to see something like pretty drastic here. I think for you to think of anything like that happening. But this move right here, pretty similar, right? You come down, you broke the 100 right over here, and you just floated above the 200. And so I guess you could look at that, but like, look at this, 562 down to 507. Like that's just a pullback. And look what happened. You just went crazy stair steps all the way up to 613 from, September, August, whatever. So the other side of this is that we're just playing this out again. Real quick. The other side of this is that we're just playing this out, right? Price comes down, boom. You're basically, look at this. I mean, this is a green candle, but it's splitting this candle in half, kind of similar to what you're doing here. The 100 is splitting this candle in half. So all in all, we could see this reversal, or if we come down here, this is awesome because if it does hold down here, I mean, this might be an entry point for myself to put maybe some call options in, right? 566, 565, whatever, or even just above. Like let's say it goes 569, 570. That might be an entry point so that you can get some calls to come back up because you're going to retrace back up. And it usually happens in a pretty quick fashion. Like count the candles here from this move. Let's say it's this move. 1, 2, 3, 4, 5, 6, 7, 8, 9 days back up. You just fully retraced this essentially. This move here. Boom. Straight V. Okay. And you don't have to do it exactly 9 days, but I would just say that, if you put yourself out maybe even a month, it's going to be good. I mean, it's going to look pretty good. Same thing here. Comes down to nearly the 200. And then you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We'll say 14, 15 days, 2 weeks to retrace all the way back up from your 200. That's pretty freaking crazy, right? So that's a SPY. I think obviously that's it. I mean, there's nothing more to it than that. I could pop the pivot point on and look at your support one is right there at 581. I went over this in a video or two ago. So that's your support one. You could come down to that and reverse, right? Because some people are like, well, what is it rebounding off of? Like when you break through, like right here, you didn't touch this. So what did it reverse off? Probably was a pivot point over here that was set from prior that it bounced off of. So the EMAs are sort of like a larger scale look at the movement. But anyways, I don't want to go too hard with this. I mean, that's pretty much it. Everything looks pretty good. If we do get this move down here, might be time for me to look at trying to enter something in that. I'll pay attention though as I go along. Lastly here, this is the last thing that I'll cover. It's going to be very, very simple. Is this. You guys are like, what? We're going back to school again? Yeah. Essentially we are. Let's pop this up. So this is from the Wyckoff theory book. This is called The Wyckoff Methodology in Depth, okay? By Ruben Villahermosa Chavez. I'm going to say it that way. I don't even know if I'm saying that correctly, but what the hell. I gave it my best. So strong hands versus weak hands, okay? This is understanding what's going on. Like, how are you looking at the market? This is exactly what is happening in front of you. So we're going to start up here, strong hands versus weak hands. The world's most liquid markets, such as the S&P 500, so the index, or SPY, like we were just looking at, right? Or large cap companies, are almost entirely controlled by large traders. If you don't know this, they are purely institutional markets where retail traders have little to do, okay? It is a battle between the big players. The big guys are really moving the money. And I'm going to get into this too, real quick in these next couple bullet points. So in other words, even if we were to get all the retailers in the world together to execute a well-orchestrated maneuver. This is give me flashbacks with AMC when everybody was talking about, hey, we're going to buy on this Friday, and people were trying to, manufacture this move. It never happened. Everybody was on Twitter, yeah, I'm buying, showing screenshots, and there was no movement. I think they got maybe a tiny, it was like 5%, maybe 1 to 5% move or something crazy like that. It was nothing, it didn't make sense. So we would not have enough capacity to move the market in our favor. Okay. So that whole snippet there totally reminded me of that. So if all the retail traders bonded together and said, hey, we're going to buy this, probably more so like a larger cap stock or something like an index, you wouldn't even put a dent in that. And there's another part of this too, another side of the coin that I'll talk about later. But next point, for large traders, the liquidity that retailers can bring to the market is of absolutely no use to them, right? They're looking for big chunks of money that they can soak up. And your money is just collateral in the way, right? If you're just so happen to be there, that money's getting scooped up. But the whole mission isn't necessarily your money. It's the other institutions, the other players that are coming in with money, right? And he classifies them into two categories, which is an informed trader and an uninformed trader, basically. Well-informed trader and uninformed trader, or weak hands versus strong hands. Or I think people were calling people paper hands when they were selling their stocks, and then diamond hands. It's like a evolution of this term, the whole diamond hands thing. But the next point here is when they enter or exit the market, they need huge amounts of liquidity that retailers are not in a position to provide, right? So our money, the orders, that's not exactly per se what they're after, right? Again, that's just all caught up in the process of everything and how the market moves. But the law of cause and effect is the next thing I wanted to talk to you guys about, which is professional traders need to plan and execute a careful strategy in which they try to absorb all available stock for sale at the lowest possible average price. Sounds stupid simple, right? Just wait. The manipulation maneuvers, right? We talked about this. There is manipulation that does exist, but at some point, fundamentals, where the chart is, it has to line up. It has to line up with the broader market. It has to make sense. The move needs to make sense. I'm going to explain this. So in the accumulation process, okay, which I believe is what RIVN is in right now and what AMC is in right now, okay, large traders create an environment of extreme weakness, okay? The news at this point will most likely be bad and many will be influenced to enter on the wrong side of the market. So any dummies coming in trying to short AMC or RIVN at these levels, like, you're not going to get a massive drop to really earn anything. If you're trying to do little what do they call them, little scalp trades, fine. That's different. But if you're looking for like these massive dips to try to rack up a huge payout on, it's just not going to make sense right now. So let's go forward. The path of least resistance. This was interesting. Part of the chapters that I read was that the professional traders with interest higher up the price level will not initiate the movement until they have verified that the path of least resistance is moving upwards. So they know that when there's nothing in their way, and they know that price can smoothly go up, and they've created enough weakness in the market on that particular stock, and that people are pretty much exhausted, the sellers are pretty much exhausted out of the market, that's when they're going to come in. That's when you're going to see the moves, right? That's when it's really fully going to take off, and it's going to trigger those melt ups, okay? They achieve this by carrying out various tests to check the level of commitment of the sellers. So what they do is, I don't know if you guys ever seen these like sharp jumps during the day. You're like, whoa, this candle went up 10% or something, and then it just comes back down. That's what they're talking about. They are testing, okay, how strong is the sellers right here, right? They're looking at the supply and demand, right? What's the demand to sell at these levels, right? That's how they're doing it like boxing, right? They're not doing haymakers. They're just doing little stick and move jabs, right? And lastly here, preparing for a major move. Preparing for a major move takes considerable time. A large trader cannot build their entire position at once. Why is that? Because large traders buy or sell slowly in small chunks over time. Okay, this way they don't attract attention or cause extreme price swings, okay? They try to keep prices stable while filling their orders at the best possible price. If I came in and I'm a big hedge fund or whatever, and I buy a crap load of stock, well, it's going to bring the price up now. I don't want to do that. I don't want to just do one giant chunk order because then it's also going to draw attention. I want to be very careful, right? If I'm a hedge fund trader, I'm going to do little sprinkle trades. You're going to see those ebbs and flows in the market. You're going to see that during the accumulation phase. And I'll show you exactly what I mean. Let's go back here real quick. I just want to put this all together for you really quickly so that you understand why I'm looking at the charts to a degree the way I am. All right, let's spread this out real quick, and this will be the last thing that I hit on. But like, look at this. Okay, you see this ginormous knife down here. Oh my gosh, you come all the way down, you're knifing down, and also too, look at the way the indicators line up with what Wyckoff is saying. He's saying with the indicators, and you're sort of getting the visual of where this is at, right? You can see that this is bottomed out essentially, right? You're getting that sharp decline. The sharp decline phase is over. The distribution's over, okay? You could say it's really over right about here because after this point, right, because you come down, it looks like it tries to come back up. And some people might be like, this is reversing and it's going to go like this way. Like, do you understand? Like, that would be ridiculous. If you've seen something do that, come down like this, right? And then just go boom, or come down like this and just go boom. Like, that wouldn't make any sense to me. So once you understand this, right, these patterns, the way they play out, you can see basically right here, this was sort of like the final big distribution. There's still distributions happening and accumulations happening in here. But like the large hedge, what this text is saying is that the large hedge fund trader is, they're accumulating here like this. You see the waves, right? They're racking up shares. The price is coming back down. They're accumulating here. The price comes back up, right? And they're doing tests. That's what these are. Like, as a common folk person, you'd be like, well, why did it come up here and then it's just like going down? Like, what's going on here? That's part of the whole process here, is that this accumulation phase here and these tests, they're testing those levels I told you about, the fib levels, right? They're seeing the strength, the supply and demand. So again, all that they're doing here, guys, in this entire range, let's just say between $8 and whatever the hell this range is, and $28. They know in here they're trying to find the most lowest prices possible, and they're trying to do it in a sneaky fashion. And sometimes maybe they may be doing it in bigger chunks, and that could be causing these waves during a test. But you have to understand, like, once they place orders and they're that big, it brings the price up to a point where, like, they don't want to buy up here. They don't really want to accumulate at $28. I sure as hell wouldn't want to do that if I know, like, right around the corner I'm going to get this, right? So that's just something to understand how accumulation works, is that when we're in this period, this range, the news is negative. Oh, the company's shit. The company is losing money, blah, blah, blah. Well, Amazon owns what, 15, 16, 17% of the company, right? They're the number one investor in it, right? And you've seen the news that comes out, right? And the challenges and the guidance and all this stuff, and the fear, right? That's when you got to start to be smarter and go, wait a minute, something more is going on with this. Because sure enough, what they do in the opposite sense, right? When you're in this part and you're just sort of floating up and down, they're trying to exhaust you for one. They're trying to get you out of the way, okay, with these kinds of moves, okay? And they're going to do it over here too. They're going to do it over here. Like, right, you're going to come up, you're going to get up here, and you're going to be thinking like, shit, I'm ready. We're launching. And then it's going to try to drop you off. They're going to try to create a spring to drop you off before this moves back up. And even when you do get up here, look what they're doing to you. Boom, boom. They're trying to drop you off here, okay? And I know I'm going backwards because I'm telling you that this is basically what will happen on the other side of the chart. It'll happen over this way. They're going to bring you up, and then they're going to bring you down. They're going to bring you up higher. They're going to bring you down. And they might even accumulate. They might put you in an accumulation phase, a little side to side, to make you really question, well, is the big move over? Like, we're going here now. Are we going to come back down? That's how they're going to try to shake you out, okay? So just understanding the ranges, what phase you are in the market too, in the broader market, what's going on with the broader market. This is going to be very helpful for you to understand the way prices move and things like that. Okay, so in the top sense, okay, watch this. This is the last thing I'll say because I know this one's going to be a bit longer today. We're at 20 minutes. Oh shit, perfect. That worked out great. We covered a lot. All right, listen. When you get up here, when you start climbing like this, and up here in these levels, right? You come from all the way up here, whatever. They're going to create an opposite narrative. This company is great, everything beautiful, like buy this. But you got Jim Cramer and all them doing all this shit, spewing all this stuff, like having people come out. Their media outlets are paid for, and they're spreading all this like buy, essentially, and that will cause people to do that. Oh, this is great. And what they're actually doing when you're up here buying is they're loading up on their sell contracts, their put contracts. So you're up here, they're telling you, this thing cannot be stopped. How many times have you heard that? You really pay attention? How many times have you heard these guys, these actors, he calls them in his book, say this is unstoppable? You know what I mean? Right when these moves are happening. And then you start to believe him. Oh, this guy's freaking brilliant, right? Let's say you're getting up to this point, like maybe the chart was coming this way. Let's just pretend this is the peak, and he's telling you this is going to be awesome. Like, and then you're like, oh no, he's right. And then all of a sudden, boom, this happens to you, right? And you start to get these, these reversals. Like, oh no, like this is coming back, and it's just doing stair stepping all the way down. Okay, so when we're at the top like this, if you know any tickers where you're sort of in a, looks like you're in a top or at all-time highs, and they're screaming to buy it. Just understand the psychology. Why are they telling you to buy something that melted up in the last year, right? That went from, let's pretend it's Rivian, $23, and it's up to $121, right? That's when you got to pay attention. All right. I don't want to go too much in depth on that stuff, guys. I wanted to kind of bunch that together so that I can give you a little piece of everything today here. But I appreciate you guys checking out the channel. If you're new, we're going to pay attention to what happens tomorrow, Friday. I'm not expecting a whole lot, but I've been surprised before. So I'll keep you guys up to date with that video. And then over the weekend, guys, we're going to also add some tickers. I'm just going to give you ahead of time what I'm going to cover. It's going to be Nike and Unity. I think those are two ones I looked at today. I've noticed some patterns that are repeating again too, some fractals. I think that you'll find interesting at least. And we'll go over those this weekend. I'll add them to the mix as well. In my update videos, we'll start paying attention. And I will also, not financial advice, I'm saying for myself, I'm looking to put up a position in those as well. So I want to go over them and kind of it'll hold me accountable to kind of review them each and go in depth on them and what I see. And then we'll go from there. So I appreciate you guys as always. I hope everyone's doing well. I hope the trading is going well for you guys. Appreciate it, guys. I will see you in the next video. All right.